Good morning and welcome back to the NWR Virtual Investor Conference Series 11. I'm your host, Benjo Blake, and next up we have Global Energy Ventures. Global Energy Ventures is an energy transition company with a mission to deliver compressed shipping solutions for transporting energy to regional markets. Global Energy Ventures' business model is to develop, then build and own and operate marine transport projects using compression as a way to store and transport natural gas or hydrogen gas. This morning, presenting on behalf of Global Energy Ventures is Managing Director and CEO, Martin Carolan. Martin has been with Global Energy Ventures since 2019 and led the company through the pandemic. Thanks for joining me today, Martin. The floor is yours.
Thank you, Andrew, and thanks everyone who's joined this morning. So I'll cover the next 20 minutes, Global Energy Ventures. We'll talk about some of the macro and drivers for hydrogen, and then we'll look at our approach and business model, and then we'll get into how we're commercializing around projects. So Global Energy Ventures has been around since 2016. It started its life looking at niche compressed natural gas projects. In the last 2 years, in early 2020, we started to look at hydrogen. We've really moved almost 100% across to the development of our IP and approach to hydrogen now. So we're looking at a compressed hydrogen format. It adds simplicity and efficiency to the process, and we think it's going to be an enabler for the export market to get going in a pre-2030 situation and as early as 2026. So we are project developers. We're not just here developing a ship as a ship charter company. We are looking to develop fully integrated green hydrogen projects. Corporate overview, I'll leave you to look at that at some point in time, but market cap roughly 50 million. The cash position still very strong at $13 to $14 million, and we remain well funded through all of our activities this year and the activities that we'll go through today. From a shareholding perspective, board of management own 10%. I myself is quite heavily invested here, so we have a strong skin in the game. So at a highest macro level, we've seen kind of remarkable amount of news coverage set around the growth profile and what looks to be this kind of 2050 decarbonisation goal. The driver for a lot of this content was really COP26 last year in October, and that saw some 30 countries now have established hydrogen strategies, which has seen significant, many $1 billion of public funding commitments in either direct funding or incentives. We've seen, over 100 projects, probably more, announced, which has many trillions of investment into the supply chains, both domestic and looking for export. And what that's leading to is this kind of seaborne trade opportunity, which we are focused on, which Wood Mackenzie estimate to be at least 150 million tonnes by 2050, and some are saying, overall, when you look at the forecast numbers across the whole market, at least 30% will be a seaborne trade. So if you think oil, LNG, coal, and all of those other fossil fuel commodities that are traded, hydrogen will be another one where there's excess supply that needs to get to the demand centres. What's changed in the last 6 months, unfortunately, with the energy crisis in Europe and Ukraine, is that energy security is now being the next key driver for action. So we've moved from strategy and incentives and planned spending to actual requirements to bring this forward. And I'll talk a bit more about that when we look at the markets. But really, but why hydrogen? So for me, there's 3 key things to think about. So renewable power will be kind of the core of decarbonisation, but what hydrogen does provide is it can mitigate against the intermittency of renewable power as a baseline supply. So the sun doesn't shine all day and the wind doesn't blow 24/7. So hydrogen is another method of using that renewable power. It then enables the transport of that renewable power from really productive supply areas to areas which they'll be short in supply. So Australia is going to be a key beneficiary of that. And then specifically on the use case, it's an enabler for these kind of hard decarbonised sectors. So I think the predominant ones early will be green steel, refining products which are already in place, so displacing grey hydrogen which is produced, power generation, displacing gas-fired power and coal, and then ultimately heavy transport and various heat. And then the shipping sector itself is really embracing all formats of different renewables, whether it's e-methanol, hydrogen, ammonia, or other formats. There's different ways to look at the sector. I mean, the way that I try to look at it is just quite simple, right? So you get this kind of halo effect being the ultimate energy. And why? Because it's efficient, it's clean, and extends the advantages of renewable power. But if you simply think about the electrification of everything, we're seeing more power requirements and more industrial applications. That's only going to extend the CO2 output. If we look at power markets in different industrial applications, there's real benefits of applying hydrogen to mitigate areas where that renewable power just cannot get that base load supply. As we've already discussed, there's this kind of direct use case. Think some of the heavy sort of power generation markets, which are now becoming mainstream, such as data centers, for example. So they are looking for renewable power solutions. And ultimately, what we need to see is a scaling of supply, which would then drive down the cost of supply and make it competitive with fossil fuels by 2030. 2 years ago, when gas was $5, $6, $7, green hydrogen was equivalent of perhaps 30 on a gas equivalent basis. Well, gas trades at 30 now. So energy security, the point that I was trying to make, is making it kind of more in demand, and it's sort of bringing forward the implementation of this whole thing. But overall, what the industry does need is storage and transport, and that needs to be done in an efficient way because hydrogen is different to other fossil fuels, and so that's the key part, and that's where GEV has its role. So globally, the way to think about different markets, there's clearly huge demand numbers which are out there. Europe, 60 million tonnes by 2050, Korea, 30. Japan, and so on. But what we're seeing now is new policy direction given just this year alone. So Europe has ambitions to import 10 million tonnes by 2030. It will have its own production case domestically, but it's looking for big volumes. But the projects are starting out at 50, 100,000 tonnes, 400,000 tonnes. So the market will be large, but it needs to start somewhere. In places like Singapore, where we've been this year, we've seen areas of 50, 100,000, 400,000 tonne markets. So we've started to work with Austrade to help define some of those low-hanging fruit opportunities, which are kind of, the question we now get asked is, what can you deliver in 26? Whereas a year ago, it was really a post-2030 discussion. So I guess the message for investors is it's coming quicker. It's going to start small, but it's going to be a very large market. And so in large markets, there'll be multiple winners. In the world of transport, the main carriers that are spoken about is ammonia, which is NH3, very mature supply route, but energy intensive, and there's some technical barriers still to convert green ammonia back to hydrogen. LH2, which is the LNG equivalent for hydrogen, still some way to go technically in terms of -253 temperature, and then obviously boil off for shipping. But in compression, what we've found is that compression, it's already a used application. It's integral to all supply chains. So that's the basis of our approach to this. So the key message here is, the 2026 timeframe is what we're seeking to deliver into. We've announced 2 projects, which I'll talk about a bit later, our own production project in the Tiwi Islands, and then we're working with a large export project in the West. In Europe, we're off to Europe next week with Austrade at a big hydrogen conference, and we have a number of meetings with supply projects around Portugal, Morocco, and into the demand hubs around the Netherlands and Germany. So we're talking to port operators, pipeline operators, and utilities. So it's getting quite exciting. So that's all great, the macro, but what is it that we actually do? What's the business model, and how do we go about it? So this is a nice simple illustration which shows the compressed hydrogen supply chain. Starting at the left, you have a renewable energy source, whether it be wind or solar, it could be hydro. That electrons is then put through a process of electrolysis, which produces the green gas, and that's the hydrogen gas. So hydrogen gas has a low kind of energy density. So all of the methods to transport or use that is to then look at compression. They're trying to increase the density. So what we're doing is to keep it simple and efficient. We're not adding significant capital and energy intensive activities to convert to either LH2 or ammonia or then reconvert back to gas. We're simply storing it at pressure. We have a new class vessel design, which I'll show you shortly, which is our proprietary design. And then we simply take that to the market and simply unload. So compression onshore is already a proven application. It's used in all of the other formats as proposed for export. We have a much smaller footprint, so it's really a neat plug and play deployment. Our volumes and distance are less than the big scale approach, but we can still achieve distances of 2,000 to 3,000 nautical miles and volumes as low as 50, and where we can scale up to 400,000 to 500,000 tons. It's really project dependent, and then obviously distance. But one of the key things we can do is that we can load follow the renewable profile. Renewable energy is not base load, and the processes that are proposed to transport require a fairly high level of base load throughput. So what we're trying to do is just make this as simple as efficient, but we need to be economically competitive, and that's the work we've been doing in our studies, and it's now starting to translate into discussions with markets. Here's a copy of our latest library on our GH2 Carrier. I mean, this is a proprietary design shipped to GEV. We have large patents around the tank design and how that integrates to a ship. This is typically a very standard Handymax carrier, which is our smaller vessel. It's 26,000 cubic meters or 430 tons of hydrogen. We simply store at ambient temperature at 250 bar pressure. So we're trying to keep the development of the ship as simple and as limited in its process design as possible. That's in order to get to market quicker. We have a roadmap clearly defined for emission free shipping. We're using electric propulsion systems. There'll be opportunities to include hybrid battery systems and fuel cell systems as those technologies are developed. So initially it will have an LNG dual fuel approach, but we will be looking to incorporate those green aspects as quick as we can. But the ship is designed to ultimately be emission free. Key to all this is our approval for construction, which we're seeking middle of next year. Our engineering is well advanced, so we're now talking to yards about the construction cost and schedule, and we're talking to ship operating partners about being the operators and potentially the owners of these vessels. That all leads us to be ready for a commercial scale operation in 2026. So the business model that we're going to market is project driven. So we're not just sitting here talking about ship design and chartering. The ways we're doing that is to develop a portfolio. We're looking at upstream hydrogen production, which is where we're originating the development of the project, which includes hydrogen production then integrated with our supply chain. The first of those is the Tiwi Hydrogen Project, which I'll go through shortly. We then offer a kind of a midstream hydrogen transport for a service. So that is compression, terminals, ship fleet. And we're doing that already in the West, and we're looking to announce further opportunities shortly in Europe. So the flagship project for GEV right now is the Tiwi Hydrogen Project. We announced this back late last year. As you can see, strategically located at the furthest most export point of Australia. It's a 2.8 gigawatt solar generation project, which will produce, when optimized, roughly 100,000 tons per annum of green hydrogen for export. We're targeting 2026. The unique location you can see there on the right presents short shipping distances to Singapore and still quite reasonable mid-range distances up to Korea and Japan. In terms of the detail, there's a number of these announcements that have been made. The key milestones that we're chasing are our environmental submission this quarter. And that will close out our pre-feasibility. We're then looking to kick off full feasibility and then look for an investment decision in the second half of 2023. So to support all of that, we have started to look at discussions with commercial, technical and financial partners. As mentioned, we've been working with Austrade. We have been receiving some direct interest. And I think what's key to this is its achievability. So location to market, we have strong traditional owner support here from the local Manupi owners. There is no native title here, so it is already cleared industrial land, which is currently used for forestry. So our time to permit is quite small, and therefore some of our impacts around cost and schedule is much reduced. Importantly, there's a port facility that was built some 10 years ago. That's an underutilized port. We would propose to use that on a 100% basis, and we're talking to the operator about that port. So strong ESG credentials lead to the ability to project finance. And what's key to all this is our low environmental impact, which shortens the environment period and obviously reduces some of the cost. So, more details are available. We're happy to talk offline. But key to this would be really the first export project in Australia for hydrogen in a green format. There will be other export projects, I suspect, around ammonia, but this will be the first hydrogen export project. The other project we have is in the West, where it's an MOU with what's called the High Energy Project. The two partners here are Province Resources and Total Iran. So this is a much larger scale project on the Gascoyne coast, just north of Carnarvon. They propose to build 8 gigawatts of installed generation, being both solar and wind. And GEV at the moment is completing a study which is being supported by the WA government with funding to look at an offshore loading capability there. So that's up to 200,000 tonnes over a long-term take-or-pay basis, and we're completing compression design, pipeline, nearshore crossing, and then sizing a fleet. What's unique here is our ability and flexibility to load offshore. Clearly, there are no port facilities available on the coast today, and you would take some years to get through an environmental case. So our ability to do 5 kilometres from shore is clearly an advantage to get this project underway near term. So also an exciting example of the way we go. So then in terms of milestones, what to look for. So this is going to be, the first half this year into September are our key kind of activity quarters. From a shipping perspective, we're underway with what we call our small scale material testing. Our detailed engineering is almost complete in June. We then convert that documentation to shipyards in Asia, where we're looking to sign a partnership agreement with a preferred yard. On the Tiwi H2 project, our environmental referral goes in. We will then move through detailed feasibility. And as mentioned, we are talking to project partners, be that EPC level, offtake, and potentially investment partners. So there is strong interest from markets in Asia to have a look at this, given the availability of a green hydrogen product in that 2026 timeframe. So clearly that would need to go through a full feasibility, and we're seeking an investment decision in the latter half of next year. And then more exciting, obviously, is some of the other new development opportunities. So as mentioned, we've been talking to a number of demand and supply hubs in Europe, and we're hoping to make some announcements in the near term about what those projects looks like, and I guess the acceptance of compression as a transport route in Europe. And lastly, before I start to take questions, some of you may be aware of our company. We've got a shareholder meeting tomorrow, which we are changing our name. So in the next couple of weeks, you'll see us, subject to approvals tomorrow, we will be changing our name to Proprietary Energy. So that looks exciting as well. So with that, Banjo, I'll hand back to you and take any questions.
Perfect. Thanks a lot for the presentation, Martin. It was great to get an insight into some of your upcoming projects. On that topic, how do you actually plan to fund these projects, and will you require partnerships?
Yeah, clearly, as I mentioned, any of these project developments, well, first of all, are going to need bankable, 20-year plus take-or-pay contracts. So they need to be investment grade. That will then provide the funding package and support for both the shipping fleet and then the hydrogen production and the upstream development. We will look for corporate level support. So whether it be offtake partners putting investment in, whether it be Korean investment groups or Singaporean investment groups. So I don't think there'll be any shortage of funding for capital once there is an investment decision made on the basis of bankable offtake. I think there'll be a lot of significant interest, whether it could be government support here in Australia or Asia, to bank that project. It's the same situation in Europe. We're talking to projects about their funding profile, and European support to get these projects up and running is very strong from government. Green bonds and then sovereign funds are very keen to chase these green projects.
Thanks for that, Martin. With the energy security in Europe as a hot topic as a result of the Ukraine conflict, what impact has this had on the potential demand for renewables in the future from your perspective?
Yeah, I think the message is quite clear to us. So it's bringing it forward. If you read about all of the additional LNG terminals as an example in Germany and through Europe. So new terminals that are being built now for implementation to move away from the dependency on Russian gas, they all need to be H2 ready. So that's clear in the domain. So you will then have bringing forward investment in terminals and then pipelines and downstream infrastructure. So the spend is coming on the downstream market. So that'll bring forward the demand for import, and then it's up to the projects to be ready, and we'll have a shipping solution which is technically and commercially viable to support that activity.
And on the topic of Europe, are you planning on exporting to Europe anytime soon?
Sorry, Benjamin, what was that?
Are you planning on exporting to Europe anytime soon?
Well, from Australia, we won't be. So that's to be clear. So 2,000 to 3,000 nautical miles is for us going from Tiwi. That's Singapore as far as Korea, Japan. I think there are a number of large-scale projects long-term looking to export from Australia, and that's in the form of ammonia or perhaps LH2. But we're looking at projects which are a shorter distance, regional in basis. So for Europe, for example, we're looking at projects that could be from Portugal or Morocco. So 1,000 nautical miles, 1,600 nautical miles is the case.
Can you talk to what potential partners might look like in terms of utilizing hydrogen?
Well, I think Singapore has a very clear example of they're looking to decarbonize. Their power industry is 95% gas, so they need to look for alternatives. So it will be hydrogen will be one format. They have a process running at the moment to award licenses for the import of renewable power via grid. So people like Sun Cable and other proponents in Asia are looking to do that. So they'll be sovereign-led offtake. So I think we're seeing the same thing in Korea as another example with Austrade. The Korean generation companies have a mandate to get out and start to decarbonize from 2030. And they're looking for early volume, so that would come with government backing.
Where do you see the real catalysts in the stock? Is it that we need to build the ships for the first of de-risking milestones along the way?
I think for me, as an investor in the stock, I'd be looking for the de-risking milestones. I think I'd be looking for, what markets tend to look at in small stocks is points of validation. So the build out of the ship at financial investment decision means the model works. So I think that is probably the latest point that you want to invest. So I think elements of mainstream acceptance of compression together with some of bigger names being associated with our programs is probably what you would look for. And then I guess the overall opportunity. I think no one else is doing compression. There is some containerized versions of shipping in compressed format. But I think we're starting to in the last year make some real inroads. I think the next 2 quarters is where we'll convert that.
Perfect. Thanks a lot for your time today, Martin. Appreciate you giving us a presentation on your projects, and all the best in the future.
Thanks, everyone.
Thanks, Martin.